Welcome to the Edge Market Update at the close on Friday, August 30th, 2024. And grains had a nice rebound to end the week strongly. December corn futures closed today on Friday at $4.01 per bushel. And November soybean futures closed the week right at $10 per bushel. So a nice rebound after what's been a long, prolonged downtrend we've been in, and we are back to short-term resistance levels. But it looks like farmer selling pressure is coming to an end, as a lot of farmers have had to make decisions on any old crop corn or beans they've been carrying, as the September contract is expiring. And also traders are fairly risk off into a long weekend here coming into harvest, as we've had some hot and dry conditions weighing on the crops and potentially moving up harvest activity nationwide. And really, we've had some stronger export demand, and domestic processor demand remains strong as well. So we will dive into the charts here in the shorter term and see where we're at. December corn futures, again, they closed at $4.01. This has been a pretty decent resistance level since the beginning of August. A big level to pay attention to is the black line, which is short-term resistance, and that is the volume-weighted average price since the June 30th crop report, when we really sunk about 20 to 30 cents on December corn futures back on that day. So that has been a significant level. It's been very well respected since the downtrend really kicked in. And then we also have the 50-day moving average, which is declining. That is coming in at $4.09, and the volume-weighted average price is coming in at $4.05. So if price does manage to get there, expect some resistance as well. Longer term, we have some big resistance in that 432 to 440 range, which is combined of some longer term moving averages, as well as the year-to-date average price paid by buyers and sellers on the December corn contract. But in the short term, we are trading above a rising 5-day moving average, and we actually did close above the 20-day moving average on corn for the first time since late July. So that is positive, but we need buyers to keep stepping in here and keep moving price higher. We are back to a neutral reading, believe it or not, on strength indicators here. We're exactly at a neutral rating. We have some longer term positive divergence forming on strength indicators. Price momentum oscillator, that is the long-term momentum indicator, and we are basically flat, very slowly moving back to a neutral level there. And in the short-term money flows, we are back into a stronger position, still have some room to run higher, but really, in a pretty nice spot here going into next week if we can get any continuation on this rally. Now, I would like to see us hold this 397 level, and especially that 390 level. Otherwise, we could violate that and move back down to critical support at the 385 level, which we rallied from this week. Moving on to November soybean futures, we closed the week at $10, and again had our first back-to-back daily close above the 20-day moving average since earlier in May this year. So it's been almost 3 months since we've had 2 consecutive days above the 20-day moving average, which has been a long time coming. We also are rallying on the backs of a rising 5-day moving average. So in the short term, the price action looks fairly good. We've had some decent buying days here, and we actually closed the week above the volume weighted average price since the July crop report. Key resistance levels for next week is the black line, which is the volume weighted average price since the June crop report. That is coming in at about $10.35. And then we also have the 50-day moving average, which has been declining for quite some time, coming in just under 1040. So those are the next pretty big resistance levels, as well as a shorter term double top here around the 1035 area as well. Strength indicators are back to a neutral reading. We're actually at a nice reading here in the short term on some money flow indicators, and then the long-term momentum. We are in a negative spot still, obviously, but we are improving those conditions slightly. Longer term for this November soybean market is, if we do get above these key resistance levels in the 1030 to 1040 range, either next week or in October, whenever that is, next big price resistance levels above there remain at 1080 to $11 bushel beans. That's where, it will be a blessing if we get back there this year, and that will be a pretty big key resistance area as well in the longer term. But for next week, the price action looks good. I really don't want a daily close below that 980, 975 area. Otherwise, we could put this short-term rally into jeopardy. But in the meantime, things are looking stronger, which is good. But we just need to keep this up, and traders need to stay hitting the buy button instead of the sell button, and we can potentially keep rallying up to this 1020 to 1040 level if we have some more good news. So with that being said, thank you for watching this week. If you have any questions, please reach out to our office. We're happy to help, and we hope you have a great Labor Day weekend. Thank you.